Hey everyone, Marcin here, co-founder of RedStone and Credora. Today I have a very special guest with me, Veso, CTO of Cap. Hey Veso, great to have you here.
Hey, how's it going? I'm Weso. I'm the CTO and founding member at CAP. It's a three-sided marketplace for private credit and also is a stablecoin.
Beautiful. That's like a great one-liner to open. So we are entering spring slowly but steadily. Hopefully towards the summer, the market and ecosystem is going to get only better and better. But stable coins are very stable, above $300 billion in market cap. Before you founded Cap, you were one of the founding members of Beefy, which grew past $1 billion in TVL. Cap has already crossed 300 million mark, but the interesting thing is you went architecturally different into a stablecoin realm. What made you go with a completely different direction for your next protocol, Vaso?
Yeah, so originally, actually, I wasn't a founder of Efi, but I was one of the lead developers and started a few months after the protocol itself launched. Beefy was really fun. It was born during that crazy food coin DeFi summer sort of vibe where everything was super exciting. So you get there, 1,000% interest, 1,000,000% interest. I was a user of Beefy, and I was really excited to I don't know, make strategies and learn how to develop, on the blockchain side. So I started just kind of shipping things, and then ended up taking over as lead developer, and then helped grow it to the one. I think at the top we were $1.4 billion in TVL. Beefy is unique in the way of that it's like a yield aggregator, right? So it's built on top of pretty much every protocol you can think of, whether it's a lending protocol like Aave, or it's a decentralized exchange like Uniswap, or Balancer. It finds the different yield sources, compounds it, makes it simple, easy for everybody. And that was sort of our goal, right? That, and then obviously keeping things as secure as possible. I was doing that for about 5 years, and throughout those 5 years, I met Ben. Ben was at Qidao, and we had a good working relationship. We did a lot of things with Qidao over the many years. We were all two of the most, I think, cross-chain protocols you can think of. Beefy is on 37 chains. I think Qidao was definitely on 20 plus chains. So we just had a lot of synergy between the two, as a working relationship. And then when Ben came up with the idea for Cap, and he kind of pitched me to join the team, I just thought it was super interesting. It was a piece of innovation. It was pushing the industry forward. So it wasn't just a stable coin, right? It's now interacting with shared security systems, using them as sort of surety bonds against private credit loans, and onboarding institutions to participate in DeFi. And to me, that was super exciting, invigorating, and something fresh. And so I wanted to jump on the opportunity to build something new and to push the industry forward.
Brilliant. So it's like a proper builder journey over 5 years of seeing how the ecosystem has been developing. And one thing that is really great from my perspective is that Beefy was very much crypto native from the early days and has been mainly focused around the assets that are in that ecosystem, whereas Cap is very much about expanding within the institutional realm as well, but also being a stablecoin, so on the blockchain rails. So that's a great composition.
Yeah, I mean, we have the deep understanding of how DeFi functions and how every sort of protocol runs, right? So when I was at Beefy, we're building on top of all the protocols. So essentially, you're very familiar with all the different types of code bases, how you interact. And so when I came over to Cap, it was very easy for us to, integrate easily. We had partnerships throughout all the different chains and ecosystems. We knew everybody. So on the DeFi side, it was very much and easy to get started, get running. And then it really was building up our institutional base, knowledge, going and talking to the institutions, making those connections, and growing that side of the business, which has been about 2 years of now work. And we're finally seeing that start to come to fruition as we're seeing huge names now come in and borrow from Cap.
Brilliant. I do remember when we first met in person at ETH Denver 2022. So it's great to also see like you guys like progress over time. Congrats. And
Yeah,
now,
same with Redstone, right? Like,
hey,
it's
yeah,
like
Redstone.
we're watching all of us kind of grow up in real time.
Yeah, definitely. And it's so great to, keep building with people that do care about the technology and the implementations that push the frontier forward. Now, talking about the core promise of CAP is that CUSD or stablecoin is always redeemable one to one with a dollar. In theory, it's simple on paper, but behind the scenes, collateral is constantly being deployed into yield strategies. Can you tell me a bit more how you actually keep the guarantee honest when the asset underneath are always in motion and not always worth exactly $1?
Yeah, Cap is more like a stable basket more than a stable coin. So essentially, you can mint and redeem Cap with multiple different stable like assets. Currently, that means USDC and also WTGXX, which is the Wisdom Tree Money Market Fund. And we'll keep expanding our footprint on permissioned assets like Wisdom Tree's fund. That'll include Biddle, Benji from Franklin Templeton. Um, these permissioned asset flows are super important for the borrow side of the business, the private credit side, because there are institutions who want like the full stream of wherever their borrow funds are coming from to be completely KYC'd. So being able to mint CUSD with a permissioned asset, having that asset available to be borrowed by the private credit institutions is important. And so the most important thing to make sure that you're actually getting the dollar value is to make sure that you have proper Oracle systems in place. So if we can't properly price USDC or CUSD as itself and the other tokens, then we can have obviously big problems on the mint and redeem side. So we put a lot of protections into place to make sure, one, if we do have like an underlying yield strategy, it's going to be very risk averse. So I think right now, beyond the borrow side, we have deployments into Morpho and Aave, just supply only, easily liquid funds. So basically, there's high liquidity in Aave, high liquidity in Morpho, making sure we're very risk adverse and we can get in and out of those pretty easily. And it's all atomic with the minting and burning. And then obviously making sure we have proper oracles in place. And so from day one, RedStone worked with us to come up with the CUSD oracle, which was a necessity for us on the go-to-market side. And it was Cap was a different way to approach how stable coins sort of function. And so pricing CUSD meant it's going to be a custom integration. And you guys worked like hand in hand to make sure that we could facilitate that and be ready for all of our go-to-market partners.
Yeah, thank you. I mean, I remember the day you guys reached out, and we were very happy to do something more custom for the builders we've known over the years and have a high respect. That also leads me to an interesting observation, especially now in 26, that conferences and everything that is happening in crypto is drifting strongly towards institution, and I believe we are not going to go back from here. So whenever you go, I've been to Consensus in Hong Kong, and every second conversation was actually with like a banker or like a financial institutional representative. So you guys captured that momentum perfectly. I do believe CAP and CUSD 3 years ago wouldn't made so much sense as it is doing right now.
I mean, look, like the borrow rates, right? Like our borrow rates on Cap on the private credit side are like 4 or 5%, plus whatever you're going to pay the delegators. You can't find that. I mean, the borrow premiums inside traditional finance are more like 10, 12%. If you're lucky, it could be upwards of 15%. And even looking at some of the private credit platforms that are on the blockchain now are offering 15% loans and stuff like that. So you come to Cap, you can borrow on the private credit side under collateralized at 5%. You negotiate your terms with your delegating partner, so the one whoever's basically placing the surety bond on that loan, and you can get yourself a really good private credit deal. And so that's why we're starting to see the demand side of the borrows like really start to pick up, because there's a lot of opportunity out there and people who can like make a ton of money, especially if you're cutting down their borrow costs. So I think it's super important, and obviously now it's starting to, I think, snowball a little bit on the borrows. So I think we'll see more and more demand come. But institutionalized, yeah, they were already like they're waiting. They were just looking for their opportunity, and I think obviously the regulatory environment to sort of give them a little bit more clarity on how to interact with DeFi.
Beautiful, interesting. And talking about rates, as you already mentioned, can you walk me through a little bit about the mechanism of the minting fee and how you essentially decide on it in CAP protocol?
Yeah. So when during our CAP's been audited 7 times, but early on in the auditing process, when you're doing the minting and redeeming, you need the USDC Oracle to be updated and be updated quickly in order to make sure that you're getting the proper price for minting and redeeming CUSD. Because CUSD is a basket and it's not one-to-one with USDC, that means that it has to kind of price all of the assets in its basket in order to understand what the value of is CUSD when it's going to mint or redeem for, like, let's say USDC as an example. And during the auditing process, we found that there was a unique bug when it comes to, I guess, push oracles. Is it push? Push is the one I think we're using. Yeah, push. And it's essentially like when the update's getting pushed down, right? And it's inside the mempool, that somebody could notice that update's happening, and can kind of arbitrage away the value difference between whatever CUSD is and whatever the update is on now the stablecoin that's there. So with Ethereum being the dark forest it is, we have to assume that MEV is always going to find these arbitrage opportunities and take advantage of them. And what we needed was a deviation threshold on an oracle to be updated quicker and as quick as possible. And if we can get a deviation threshold of 0.05%, then we can kind of like lower our minting fee to double whatever the deviation threshold is. And at the time, there was just no Oracle solutions that had a deviation threshold that was like economically viable for us. So we had, I think the most at the time was like 0.25%, which means that we had to charge 0.5% in a minting fee to just like get rid of that arbitrage issue. So then we came to RedStone. We said, hey, here's our problem. We really need to like a faster USDC Oracle solution because we want to reduce the minting fees. Just because, like, especially when you're bootstrapping, CUSD liquidity, 0.5% is a lot of fee to like basically get charged up front in order to go in. We're talking about stable coins, right? So they're earning like 5 to 8% interest. 0.5% right off the bat means you have to make that up over the next month. So we went to RedStone, said, hey, like, we really need a quick deviation threshold so that if it deviates 0.005%, that reduces our minting fee by a lot, helps us on the go-to-market side, makes the cost to our users a lot less. And so we're able to work with you, lower that by 0.4%, and it was $1 million reduction in fees to our users. So it was great. You guys have always been great partners, but we really sort of needed that. It would have really stymied our growth right at the beginning, and if we didn't have you guys, I don't know how we would have grown so fast.
Really great. Thank you, Vesa, for walking me through. To be honest, I wasn't aware that you found that edge case in the security audit, which also showcases you guys treat the security and reliability aspect of the protocol very, very highly. 7 audits. I can only wonder how many you're going to have by the end of the year. So what is the minting fee right now?
It's 0.1%.
All right, so it's 0.1%, so it diminished like pretty significantly. Great to...
Yeah, originally it's supposed to be 0.5%. So it's like a tremendous reduction in minting fees.
All right, beautiful. Yeah, so oracles is, always an interesting concept for people to unpack. I usually think of them a bit like a referee in a high-stake match. Nobody notices them when they're doing their job perfectly. But then there's this one bad call and the wrong moment, everyone is hating them and remembers, right? So it is not the best job to be delivered, but it's very important and it is needed, right? Now, talking about CAP's future, like what do you guys plan to achieve throughout 2026? And in general, what are your upcoming milestones?
Yeah, so Cap's flywheel is all focused on the borrow side. The way Cap is built is essentially we get the stable coins in, so USDC, money market funds, as the minting of the CUSD token, right? That can be used within DeFi. So there's Pendle markets. We have Pendle tokens bridged over to Uniswap, CUSDs on Mega Mainnet. We have a whole bunch of utilities you could on Morpho. We have Stake CUSD looping that's available. So there is utilization for the CUSD and Stake CUSD tokens. All that liquidity goes into a bucket of funds that is able to be borrowed by private credit. So under collateralized loans to institutions. This is where we're working on, I think, most intensely is, closing all of these different deals with different institutions for different use cases, making sure that we're doing the matchmaking between them and the delegation side, who is covering these loans. And then we have this third side, right, which is the delegators. These are the Bedrocks, the EtherFis, the Renzos of the world, who have assets in shared security systems, and essentially are saying, hey, I'll put up $100 million of Bitcoin, and I'll guarantee this loan from Susquehanna, $50 million. So it's essentially now creating an over-collateralized loan. If for some reason the loan defaults, then the delegator gets slashed. So it's for the CUSD side, full safety, right? Like you're fully covered on the private credit loan. You're not taking the risk on the private credit side. Instead, it's being over-collateralized by the delegation side. For that, they get paid a little bit of interest from the borrowers. And the borrow premiums on Bitcoin or ETH are much lower than the dollar. And so they get 3% or 2% interest on Bitcoin. That's more than they can get anywhere else. And they're securing loans with some of the largest, most infamous public, trading companies in the world. So we're really focused on growing the borrow side because our flywheel is the more borrow demand, the more interest that goes and flows into Stakes USD, which makes the interest of Stakes USD very competitive in the stablecoin interest-bearing marketplace. And then we find more people enter into Stakes USD to generate more interest, which gives us more liquidity for the borrow side, keep scaling up the borrows even more. And so we're really working on making sure that flywheel gets executed. And we have a whole bunch of different ideas and improvements like fixed term loans, and we're looking to do the stable drop that's coming up in the next hopefully month or so. So we have a lot of things to accomplish in 2026, but really focusing on the fundamentals of the business, which means increasing the borrow size, then in turn increasing the amount of liquidity, and really get that flywheel going is the most focus.
Really ambitious plans, and I keep my fingers crossed that everything works out well over there. Thank you also for walking me through, let's say, the whole process, which leads me to an interesting question. What do you believe is one thing that people get wrong about CAP and keep repeating that makes you annoyed? Is there one thing that you would like people to remember that?
I think the main argument against CAP's success is the ability for us to maybe not be able to grow the shared security side. So, essentially on the shared security side, you're taking the risk of the private credit loan. And I think what's a little bit misunderstood is that the parties that are on the borrow side are, trusted institutions. So, and I know that trusted only goes so far, right? Because we've already seen, I think, on the private credit market and traditional finance, some people are already blowing up. It can always happen. And there's a risk associated with that. But it's essentially when your counterparty is, somebody on as a publicly traded company, your risk level can decrease a little bit because you can enter into a formal agreement with them and have some sort of retribution in case of a slashing event. So I think that there was a little bit of a, hey, are they going to be able to execute on the delegation side? And we're already kind of showing that we've had some pretty large scale delegations come, some really massive partnership announcements in the last couple of weeks. We actually have more coming in the next few weeks. And I think it's really kind of showcasing the power of what CAP can be. and starting to close any worries that we can't scale on that side of the business.
Really good. Nice. Now, when we as RedStone look at CAP, it's interesting because we categorize you in two buckets of our clients. One is the consumer of the data feeds, as you mentioned, on the stablecoin side to ensure lowest minting fees. But it's also about asset issuer side, like CUSD and expansion on, right now at least, Ethereum and Mega ETH. And I assume in the future more and more into other like DeFi protocols on those markets. Are there any DeFi plans or expansion to any other markets you can tell us or tease us, or any other alpha you could give to the listeners?
No, I mean, we're in talk with any stable coin related new blockchains. I mean, honestly, we want to be part of all of the emerging technology space. So there's a lot of really cool things that are like launching this year that we're very much in touch with and want to be a part of. Obviously, Mega ETH is something personally I'm super bullish on. They launched, but their main attractions, right, the main core killer applications aren't 100% live yet. So I'd really am excited to see, once those applications are live, the growth of how the Mega ETH ecosystem is going to be, and hopefully, we can play a huge role in that. I also just think the space has, it's, like I said, it's a builder's market right now. So we're seeing people sort of push the boundaries, come up with new ideas. It's the time to kind of block out all external price action and to just kind of focus on coding and, building, honestly. It's what we're doing at CAP, kind of blocking everything out and focusing on building out our fundamentals and improving the protocol. And I think we're seeing a lot of our counterparts in the industry sort of do this exact same thing.
Excellent. Well, so I have two last questions. First being, you've been in the space for quite a long time, especially with the builder hat or builder cap, right? Is rather better things to say. What's the one thing you tell a founder today about getting infrastructure right before they actually need it? And do you have anything else you would say to builders that are building in the space?
Yeah, I'd say it's a scary time to be a builder, because as easy as it is, and when I started doing Solidity and stuff like that, we didn't really have the AI tools that we have today. And I think a lot of people maybe think that they can build quickly and build fast with AI and kind of vibe code things a little bit. And with smart contracts, you have to think that you're going to be exploited at all times. Like, you have to essentially come with that builder hat on, that I have to look at every line of code, every angle that somebody can attack me. And you can't just build things without knowing 100% how they work and how they function and how they interact with other protocols, and then ship them live that are going to hold value. So I would say for any new builders that are out there, that's great that you used AI as a tool to build something, build it quickly, but making sure that you're, really understanding all the functions of your contracts, where you can kind of get hurt, that you're getting audits done, you're thinking security first. You may have a really great idea, but you're going to be dead on arrival if you have a security incident. So it should always be the most important part of your process, is thinking about, where you can sort of get hurt, and then how you're going to use third-party systems to review your code, watch your code, making sure that you have proper bug bounties in place, so that you have all the security researchers that are so good in this industry, looking at your code at all times. And I would say my number one piece of advice is to always think security first, and it's okay to not ship things if you want to go back and get, one extra audit, or you want to look one more extra time. And I would focus on that more than being quick and just shipping things.
Yeah, that's a brilliant commentary, because many of the times in startup world you are taught, hey, ship fast, break things, and then repair. Whereas in crypto, you maybe not always have the second chance, right? Like, you can have this one blow up and it's done.
The blockchain space is just not that way. You can't just ship fast. Like, you have to make sure that what you're shipping it is fully tested. It has, and not just a full test suite, but it's gone through an invariant audit. Like you're looking at all the edge cases. You have so much value that could be taken at any second that you can't just, ship and go, oh, there's a bug. Like you can't have bugs. That's it.
Yeah, that's it is scary, but it's also a very interesting space to be building in. All right, and then the last very short question. What is one metric you want to nail by end of 2026 with CAP? Is it TVL or is it something else? And what you're aiming?
Yeah, I'd like to have, by the end of 2026, I'd like to see $1 billion of borrows.
All right, so with that, I also hope it's going to be over 1 billion, maybe 2 billion, we'll see. I have very little doubt that guys are not going to deliver. Thank you very much, Veso. For listeners, make sure to follow Veso on Twitter and follow CAP, all the great stuff they're doing. Hope to see you soon at HCC in Cannes and all the other conferences. And it's been beautiful to host you. Thank you.
Thanks for having me on.
Cheers.
Cheers.
Okay, now if you can, I will stop the recording.